How do you see these last trading days of 2024 playing out? What trends are you watching?
I got to be honest, I don't assign a particularly high amount of importance to the last 2 or 3 trading days of the year. I would actually say that most people have had a great year in the markets. It's been pretty hard to not have a good year. So if you're trading very aggressively on December 30th, I'm going to go ahead and assume that you are either insane, don't have a lot of family, or are drastically underperforming everyone else and need to do something weird in order to catch up. Most normal people have done most of what they plan to do. In my side of the business, which is wealth management, you're going to see a lot of rebalancing take place. And most of that will happen in January, not in December. And the reason for that is, after a year like this one, there are going to be taxable gains for wealthy households, and nobody wants to take those earlier than they need to. So I think you're going to see some activity. I think you're going to see some stocks for sale, particularly some of the biggest winners of this year. The prevalence of custom and direct indexing within wealth management, which is, by the way, about $7 trillion worth of assets, means that you'll see this stuff happen regardless of fundamentals and regardless of technicals. It's just people that are overweight one thing that want to be slightly less overweight, and they'll be adding to things that haven't worked as well. They'll do that systematically. People will look at it and say, oh, it's the great rotation. It'll run its course, and that'll be that. But I just want to give people a sneak preview of what they should expect to see in the first 2 weeks of the new year.
All right, there we go. So just hypothetically, Josh, in case someone doesn't have family or they are insane or lagging the rest of the market, what areas do you expect to see some pressure on? When you talk about the stocks that have really benefited so far, that you may see less weight on those, are we talking NVIDIA? Are we talking Palantir? What areas, if you don't want to go individual names, are you talking about?
Where I think there'll be pressure?
Yeah, right. I mean, you're saying some people want to trim some positions where they're overweight. So are there sectors or the individual names that you're looking at?
I'm saying the opposite. Frank, I'm saying the opposite. I'm saying you're going to see big moves after the first of the year, which will be mechanical in nature. There'll be rebalancing trades at wealth management firms, family offices. That the next 2 days, I have no idea. The point I'm trying to make is I don't think you're going to see a lot of activity one way or the other, because most people have had a good year and they don't feel the need to push it into the end of December.
All right. Joe, going to come over to you. Looking at these last trading days of the year, is there anything that you're watching as we look at these last days?
So I think there's a very important conversation that we need to have, and it's regarding what we're seeing within the market. We'll talk a little bit about January and the January effect as the show develops, because there's some interesting statistics, in particular related to the last 4 years. But Josh used the word several times, people. He talked about people participating on a day like today. This morning, we're looking at the market. I'm looking at the market as an individual. And what I see is a 10-year Treasury yield rising to its highest level in the spring. Well, everything that I've heard now, and the market is under pressure. All 3 of the major indexes are under pressure at this point. And what I've heard over the last 2 weeks is rising yields is really bad for small caps. And what have small caps done? They're down 7% so far month to date, dramatically trailing the NASDAQ and everything else. So I think there's a very strong public service message here for investors. There's more money in the market right now than ever that cares about where the market is at the end of the day. And that is not what the overwhelming majority of people actually concern themselves with. People actually worry about where's the market at the end of the quarter, where's the market at the end of 6 months, or in a year, or 3 years, or 5 years. Algorithms and zero-dated options are dominating the daily price action. And on a day like today, when you see things that seem not logical, like the simple premise that a 10-year Treasury rises to its highest level since the spring, and the one equity size class that should suffer most is actually leading the market higher, you begin to understand what's going on in the markets right now. And I always had the expression, it is what it is. I'm not trying to change the game, but you understand the game. And if I look at zero-dated options today, okay, if I look at options, overall option volume overall, this is fascinating. If you look at the top 10 options traded in the market today, 9 of the top 10 options have an expiration today or tomorrow. The top three are S&P calls with a notional value of nearly $50 billion. And they came early for the zero-dated options in small caps, the 224 calls. So for the viewers, you have to understand as you move into 2025, sometimes there's going to be price movement that seems completely not logical, and you just have to understand. It's quants, it's algos, that's the growth of the market. We're not putting the genie back in the bottle. It is what it is, but you can't react to it.
So can't react to it. Brent, I'm going to come over to you. Joe making a point. We're going to talk a little bit more about, again, the January effect and some of the impact that algorithmic trading is having on the market. Harder to get out than you might think. But I do want to talk to you about the end of the year. A couple things I just want to point out. S&P coming off its best day since the day after the election earlier this week. NASDAQ having its best quarter since Q4 a year ago. And as Joe was just talking about, the Russell having its worst month since September of 2022, back in the pandemic.
Right. Well, I mean, I think if we could just take what Joe said and record it and just replay it, that would be like a foundational piece of knowledge all investors need to understand. Or the machines run the market on a daily basis, but over the immediate, intermediate, and longer term, it's like momentum, sentiment, fundamentals, and earnings, drive returns. And I think what's interesting right now is that while the S&P this year, going into the end of the year, even though the volume's really light, continues to charge towards all-time highs, the breadth underneath the market really continues to disintegrate, where I think as of this morning, only 30% of S&P names were above the 50-day moving average. And so I think that what's going to happen next year, and to kind of build on Josh's point as well, the first 2 weeks of January are the biggest 2 weeks of the year for money going into the market from rebalancing. And so I think that going to your original question, going towards the last few days of the month, the tape is light, the direction should be higher. There's no reason to think that it would be anything to counter that. I think also you're going to get continued momentum into that first 2 weeks of the year, which happens to coincide with the inauguration. But I do think after that, when we do have Trump, we do have his team, I think there's going to be a lot more volatility in like the third and fourth week of January than the first 2 weeks, which I think is going to be excitement moving towards the inauguration. And then number two, all of the money coming into the market from, to Josh's point, the simple rebalancing that happens very mechanically the first 2 weeks of the year.
All right, Jim, I'm going to come over to you. Looking at year end right now, I think it sounds like everybody at the table here is kind of looking ahead to January, but we do want to talk about these last trading days of 2024.
Well, I think I agree with what's been said so far, which is to say that there's a lot of unique, somewhat unnatural forces that occur in the last days of the year. I definitely would not impart too much importance to what happens in these last few days. As Josh pointed out, there's tax loss harvesting, there's deferral of gains. Joe, you made a fabulous point with regards to zero-dated options and what's going on there, moving the markets around on an hour-by-hour basis. If you're in the world that I live in of trying to fundamentally analyze companies and think about what a business is worth, compare that business worth to where share prices are trading, none of that has any bearing on how I would position my portfolio going into the new year. So it's not that I want to punt on the question at all, Frank, but I think all four of us are saying that these last few days of the year are not where fundamental analysts are really making their bones. However, if you look into January and beyond, I will make the case for the third year in a row, and hopefully the third time is the charm, that the rally should broaden. We have a very strong economy. We do have a Fed that is continuing to cut interest rates, regardless of where the 10-year is, Joe. And maybe that's reflecting inflation, and maybe inflation, after a little bit of scare here in December, actually turns out to be just a little head fake and rates come down. I don't know, but what I do know is that the Fed is still cutting interest rates. China's stimulating its economy, needs to do more. Again, from my perspective, which is defined as a fundamental business analyst, I like what I see as far as the broadening of the rally to include the equal weight S&P 500. Bryn, you've talked about that a lot, and small caps. One quick comment on the equal weight S&P 500. It has underperformed the headline index by 14 percentage points this year. 14 percentage points. That's more than last year. I mean, there is something that will cut against what I'm saying, which is passive investing will always feed the largest stocks in the market, and that's where people like me calling for the broadening of the rally may be wrong, but my goodness, at some point this will reverse.